Hello, chart watchers and Decision Point faithful. Welcome to this special episode of the Decision Point Show. I'm Erin Swenlin, and I'm going to take you through a very interesting topic today that I think every trader slash investor should be aware of. So I'm going to just get right started with this. We have quite a bit of information that I'm going to share with you today. All right, so today I'm going to talk about investment horizons. And I know that a lot of people are familiar with some of the terminology, but I don't know that everybody is familiar with all of it. So I'm going to go through these and give you an idea. First of all, what are the definitions of a short, intermediate, and long terms? What are those? I get this question often by beginning traders and even in some of my advanced and expert traders, just to get a feel for what I'm talking about when I say short-term, intermediate, and long-term. Then I want to talk to you a little bit about trading versus investing. And I'm sure you've heard both of the terms, and they have slightly different meanings, at least in my mind. So I'll talk to you a little bit about that. We'll look at what charts you should follow based on the time frame that you are investing in. So if you are looking at intermediate term trades, you're going to want to follow different charts. So I'm going to go through how to do that. And then we're going to look at bull and bear market configurations or bias. You really want to understand that when you get into your investment and trading decisions, because it really will help you with understanding the expectations that you need to have when you go into your investment based on what the chart looks like just right up front. Then I'm going to go through our price momentum oscillator and trend model signals, because those will also help you with each of those charts in the different terms, and they react differently in the PMO especially, but we'll talk more about that later. So let's start off with time horizons. So the short term, these are my definitions. I think that they are pretty typical across the board. The short term, I did not put the ultra short term. I do talk about the ultra short term at times. That would be in your minutes to days charts, but we're looking at, I want to concentrate more on short term, which is usually defined as days to a week or two. At least that's how I look at it. So if I'm going into a short term trade, I want to be familiar with what it's going to do in the next few days and to the next couple of weeks, but I'm not looking for something that I'm going to hold for a long time. Now, when you get into the intermediate term, those time horizons are typically you're looking at weeks to a month or two or months. And so when you're looking for your investment here, you're going to want to look at different charts to give you different indications as to what you want to invest in, whether it's a good intermediate term trade versus a short term or a long term. Long term, I consider months to years. I have 2 years, to a year or two. That's what I would be looking for on long-term investments. So that's my time horizons. These are how I look at it when I say this is a short-term investment or this is an intermediate term investment. This is where I'm going with those time horizons. So trading versus investing. Like I said, I mean, they mean mostly the same thing, but I kind of look at them differently. For me, trading typically occurs in the short term. When you're trading, you're going to be pretty involved. You're not going to be, just holding on to an investment, maybe checking your investments a few times a week, maybe in a week, once a week. When you're trading, you're typically going to need to keep your hand on the wheel, as I like to say. So your trading typically will occur in the short term. So as I said, your frequency of investing is going to be high. You'll more than likely be changing over your positions more frequently than if you were doing a longer term investment. So as I said, your short-term trading is definitely going to require some oversight. Investing typically occurs in the intermediate to longer terms. And mainly that's because, you don't want to have maybe as many trades. You'll have a few, maybe you won't be in and out of positions that often, but you're certainly paying attention, but you don't have to watch it every day. So that's really the difference to me between trading and investing. Many of you don't have the opportunity to sit in front of your computer and look at charts all day like I do. So your investment time horizon may change just based on that fact. And then, of course, there's the buy and hold strategy. And of course, this means you have very few position changes. Now, one thing that I would say about all of these particular differences in trading, investing versus buy and hold, for me, I think it's important to have the spectrum. Unless you are, like I said, aren't able to watch your investments every day, or you don't want to be that involved, you probably want to skip out on trading in the short term. But what I like to do is have different accounts in my larger trading accounts. So I have different portfolios based on these different time horizons. So I have my buy and holds. The ones that I have, they're my hedge positions. For example, gold. I own gold all the time. Bonds. I typically own some form of bonds, just as part of my whole portfolio. But I put it in a different, your IRA is a lot different than, say, your cash account. So for me, my cash account, that's the short term. That's where I need the oversight because it's my cash. And it's basically a piece of my savings account. So I have to pay attention to that very closely. And that's where I use my short-term trading, is in that account. But then I have my intermediate to long-term accounts. So I have some that I do a little bit of trading, maybe not as frequently as I do with my cash account. So for me, I think it's important to, if you can, have a little bit in each of these time frames. So what charts are you going to have to follow then? That's very important when you have to pick your investment. What should you be watching? So for me, when you do any kind of chart analysis, you should always start with your longer term chart and work back. So for example, typically I am timing my entries and exits in the Diamond Mine and my DP trading room. I time those using minute charts. But I don't start with the minute charts. I usually start with a daily chart. So day trading, you're going to want to look at, minute charts, maybe the 1 minute to the 5 minute to the 30 minute, because you're trying to get in and out, obviously, within the day or a day or two. So you need to be watching those charts. So I think you're getting the hang of this. Short-term trading, daily charts to minute charts. So like I said, I concentrate on short-term trading for my DecisionPoint Diamonds report, which I welcome you to go check out on DecisionPoint.com. But the DecisionPoint Diamonds is my, my trading report. So I have to look at daily charts. And then when we get into the Diamond Mine, my Friday subscriber only trading room, we'll go in there, we'll look at those daily charts, and then we will look also on the other side at a minute chart so that we can time our entries and exits. Now, if you're intermediate term investing, you really only need to start with a weekly chart and move to a daily chart. And this is why I'm saying you don't have to have your hand on the wheel all the time. Because if you're looking at a daily chart, I mean, granted, it changes every day, but you're not getting all of that data in a minute chart. However, and I didn't put it here, once you get to the daily, you start with the weekly, move to the daily, then you want to go into looking at your minute charts again, because I do this for my timing of entries and exits. Now, if you're long-term investing, of course, you're going to want to start with your monthly charts and work back to a weekly chart, and then look at a daily chart for your entries and exits. Although I still recommend, when you're ready to enter a position, take the time to sit in front of your computer or your phone and make sure that you're looking at those 5-minute charts. I use a 5-minute candlestick, and it's excellent to help you time those entries and exits using absolutely the same indicators. I use the same indicators on all of these charts, and I'll show you why. So we have to consider, when we look at these charts, a bull and bear market configurations. So how do you determine whether your chart has a bullish or bearish bias? Well, once I put this early, but you need to know what the bull and bear market configurations are for your particular stock. I'm not talking about the market in general. Of course, it's helpful to know what the bias is in the major markets, but typically it's bullish. So once you know what rules to follow, you can temper your expectations based on the signals. So when you look at these charts and you look at where those EMAs are, where price is, that's how you can determine whether something is overbought or oversold. So you basically want to know what your configuration is, because overbought and oversold are going to be treated a little bit differently based on whether you're in a bull or bear market configuration. If you want to learn more about bull and bear market rules, I did a workshop on that. You can look it up on YouTube. Just put in my name, Erin Swenlin, and bull bear market rules. I'm sure it'll come right up. Or you can just go to our website at DecisionPoint.com, and on our blogs and links page, I'll show you. You can get to those workshops for free. So you do not have to be a member in order to see my workshop on bull and bear market rules. So the long-term trend model is what gives you that signal. It gives you what the bias is. It's very simple, the 50 and 200-day EMAs. That's all it's about. Where is the 50-day EMA in relation to the 200-day EMA? Because if it's well below the 200-day EMA, then you're going to want to follow those bear market rules. And if it's the 50 days over the 200-day EMA, then you follow those bull market rules. And as I said, it really comes down to tempering your expectations based on those signals in whether it's that configuration. So for example, let's say you looked at your chart, the 50-day EMA is well below the 200-day EMA. So you've got a bear market configuration for that particular stock. So what does that tell you? Okay, well, let's say, oh, I see a breakout, or I see a bullish chart pattern. Well, if you're in a bear market configuration, you really shouldn't be expecting those bullish patterns, those bullish breakouts to work out. They typically are going to be, under the force of gravity to pull that stock downward just because it's in that bear market configuration. And you also need to consider whether you're in a bull or bear market configuration, because you want to treat overbought and oversold differently based on those time horizons. So for example, if you're in a bull market configuration, you've got a stock that's running and price clearly is overbought. However, when you're in a bull market configuration, overbought conditions can last a while. So you can see that continue and continue as it runs and just gets more and more overbought, but that's okay because that can persist. So your expectations in a bull market would be to the positive. Oversold in a bull market is especially good because, of course, that's your entry point. In a bull market, your expectation is it's going to come out of oversold and you're going to get that move that you want. So that's pretty simple to think about. The other is those bear market rules. So if you're in a bear market configuration, overbought and oversold are treated much differently. Overbought, you better pay attention because you're in a bear market configuration. And if you're overbought, the chances are highly likely that the price is going to move from overbought. Those indicators will want to go out of overbought. And so the chances are in a bear market, overbought conditions are going to be very, very dangerous. Now, on the other side, oversold conditions, you think, okay, great, this is time to get in, but you're in a bear market. So oversold conditions, we consider them at decision point. I think Carl coined the phrase thin ice. So you have an oversold stock. It looks good, but you're in a bear market configuration. So you could get that move off of that low and those oversold conditions, but you have to temper your expectations because that's still oversold can persist in a bear market, which means, of course, it can get more and more oversold, meaning it's going further and further down. All right, spent a lot of time on that. So you want to use that long-term trend model where the 50 and 200-day EMAs are so that you can determine that bullish or bearish bias. All right, so let's look at the price momentum oscillator and the trend models, because I think these are really important. They are those indicators that I use on every single chart at every single time horizon. So the trend models are pretty easy because the short, intermediate, and long-term trend model signals are derived simply from a daily chart. So you don't have to go any further. That's going to tell you your short, intermediate, and long-term trends. So you want to know those signals in all the time frames, especially if you're trading in a different time frame, right? The price momentum oscillator actually reacts differently in each time frame, meaning it looks different on a monthly chart versus a weekly chart versus a daily chart versus a minute chart. So it's going to be telling you the momentum in that time frame. So the trend basically gives you that backdrop so that you know what your signals are in those time frames, and then the PMO is what tells you that momentum in each of those time horizons. So you want to know the momentum and direction and signals in all time frames, especially, of course, if you are investing in the long or intermediate term. Very important. All right, so let's go look at some examples, and I did pull out some that I thought looked pretty good. So here's what I did. This is the results of a scan that I did before I am presenting here. So these are pretty up to the minute here for the day that we're recording. And what I did is I ran a scan that I like to call Carl's scan. Carl's scan basically picks out really beat down stocks, and they're showing promise. So basically, these stocks are typically going to have a bear market configuration. It's just how it goes. But I want to catch something at the bottom. So as a trader, these are great, right? Because I'm going to look at those short-term charts, and more than likely, that's why it ended up on this list. It's beat down, but it's starting to show some promise. So some of the examples I pulled from this group. The first one is, let's see if I can get these in order, I'll make it easier, Equifax. So the first one we're going to look at is Equifax, and this is the daily chart. I'll make this one bigger. The others are going to be a little small. All right, so the daily chart, we need to know what's going on, right? So this one, as I said, is beat down, not totally beat down because the 50-day EMA is above that 200-day EMA. So you still have that bull market bias for Equifax. And so we know that we have a PMO buy signal. We can see the RSI is just getting positive. So in a short-term time frame, this one looks pretty good. Everything is lining up the way that we want it to line up. The issue then becomes, well, what's happening in the longer term or the intermediate term? So let's look at the weekly chart. So remember, that daily chart looked quite positive. It looked like it was coming out of a downtrend in the shorter term. But look what's going on the weekly chart. So here's your intermediate term time horizon. The RSI is still negative. Granted, it's more in the neutral position. But the main thing is to look at the OBV and look at what's going on with the price momentum oscillator. So first of all, we're on a sell signal. We're coming out of that overbought territory, and we're still falling. And there's certainly further that it can fall. You have, and you can see it in the thumbnail really clearly, you have declining tops on your OBV, and what's going on here, declining price tops. So that's confirming a downtrend in the intermediate term. So you probably wouldn't want to look at Equifax as an intermediate term investment. So let's go to the monthly chart. What are we looking at long term? All right, well, the long-term chart looks much more healthy, does it not? You have a PMO buy signal in this case. You have a bottom that came in above the signal line, and that I always find especially bullish. We had topped, but now you can see that momentum is shifting upward on the monthly chart. So clearly your best entry in the long term would have been at the end or mid 2019 in here, where you got that buy signal. So right about here. So that would have been when you would have gotten in on a long-term investment based simply on that PMO. All right. So let's go back. The other one that I'm going to show you is PRLB Proto Labs. This is an industrial machinery industry group. Here we go. So this one, again, remember I ran this scan and I'm looking for charts that are showing promise, but they're pretty beat down. So here's an example of another one. So the RSI is neutral, so we can see there's improvement here in the price. We can see that the PMO momentum is looking good and moving upward, almost at a buy signal. We have rising bottoms on the OBV, which is also good for a short-term trade. So basically this one is lining up, right, as a decent short-term trade. The 20-day EMA is now holding as price support. The 50 is above the 200, so I can start expecting some bullish results, you know, from this configuration. I see that there is a V bottom, as we call them, and once price retraces up about 1/3 of the way on that V, the expectation is a breakout and a move past the beginning of that V bottom. So again, short term, this one's really lining up nicely for a move to the upside. But what do we have here for a weekly chart? Not good. This is not an intermediate term investment. You've got a PMO sell signal that's just come in. Again, you have declining tops on the OBV. So if your time horizon is more, I don't want to pay attention to this so much, I want to let it run, this probably isn't your best choice because it does have a lot of bearish signals and bearish bias to it. You can see that it's trying to fail here. And on the monthly chart for the longer term, well, this looks totally different, does it not? We have momentum on a buy signal here and it's moving higher. It is not overbought. So in a longer term horizon, if you're going to buy and hold this for a long time, this actually isn't a bad time to invest in it. So you can see that based on those 3 time frames, we had completely different outcomes, right? Or, you know, you really are looking at, well, where do I start? How do I go through these? This is that example. So let's look at another. I'm going to pull up, I think Logitech might be one I wanted to look at. Yeah. So this one, we've got a daily chart that's pretty darn ugly. You've got a short-term trend model sell signal here where the 5-day EMA crossed below that 20-day EMA. You do have a bullish bias because, again, that 50-day EMA is above the 200-day, so that's a good thing to look at. And we can also see that the RSI is turning up. It is negative, so that would give me a little bit of concern in the shorter term as well. And then you, of course, have price breaking down below that 50-day EMA, and currently today unable to get above it. So this is not a short-term trade I would be interested in, possibly because there is support here at $75 and it does appear to be bouncing off of it. But I am a momentum trader and I just don't want to get into something where the momentum has turned negative. So let's look at the weekly version. Weekly version also doesn't look too good. It doesn't look as bad as it does on the daily chart. We do see that momentum has shifted downward, but we've seen that previously on a pullback or a correction. So we have the bottom above the signal line. We are a little bit oversold here. So with that tipping PMO, I would be a little bit concerned in the intermediate term. But we do have a positive RSI. It's gotten itself out of this overbought territory as far as price. And we can see that this 17-week EMA, I like to use the 17 and 43-week EMAs just because of the way they mimic the 50 and 200-day EMAs. So you can see that that area has been breached, but at this point we are trading above it. Weekly chart, I'd say more neutral as far as an investment, but remember, daily chart, ugly. Weekly chart, meh. What does the monthly chart look like? Very, very nice. It's on a very steep rising trend, which can always be a little bit dicey, but based on the PMO, you can see that it would have gotten us in right about here at the latest about here. And so we have a really nice gain. And according to the PMO, we still should have more gain over the long term. Remember, long term is what? Weeks to months. So let's see if I can find another example here. Kind of want to find something a little more beat down. Let me see if any of these have that. Man H was one that I was looking at. All right, still not overly beat down. But as you can see, we have that 50 above the 200. So again, bullish bias, but the RSI is negative. We are seeing some improvement in momentum here, but it's sort of flattened out. Rising bottoms on OBV, so that's a good thing. Big 3% pullback, and it is bringing it below all of those EMAs. So, you know, this one looks kind of meh, if you will, not great in the short term, somewhat. What's the weekly look like? Pretty ugly. I do remember this one, pretty ugly. Again, PMO sell signal here. And then you do have the OBV. You can see volume is falling very quickly. All right, I'm gonna see what I can find out on my dashboard. I wanna find a loser here. Let's look at scooters, the low 10, top down. Who's losing? Okay, so you're losing that 50 and it's moving down to the 200. RSI is negative. We have a PMO top below the signal line. This is your shorting opportunity. This is certainly not a short-term trade that you want to make to the longer side, if you will. Weekly chart also still very ugly. Do we have a different monthly chart though? Nope, this one's even more ugly. So you do have that rising trend, but you can see that all three of those on that beat down chart not turning out to be that great. So let's see, I think that XOM might be a good one. Yes, a very good one. All right, so this is an enticing chart, right? We have a stock that is extraordinarily beat down. Look at how the length between the 50 and 200-day EMAs. This has a bearish bias. So what does that tell me? I need to temper my expectations. So you have a PMO that is rising. That looks great. You've got a positive RSI now. You have that big gap, and you're getting that move to the upside you want. We're over the 50-day EMA. However, it's a bearish looking chart. So my expectations should be tempered as far as this breakout continuing. And in fact, this could very well turn out to be a reverse island. So the chart looks good, but the 50 is well below the 200. So you have to watch out. What does this one look like on a weekly chart? We're seeing that improvement. You're seeing that move to the upside. But again, you've got your EMAs configured quite negatively. So you want to keep that in mind. So even though we're getting that change, we're seeing the RSI improving, we still need to be cautious in the intermediate term. If we look at the monthly chart, certainly not a long-term investment. Probably want to keep this off your buy and hold list, despite being in an industry group that maybe you want to hold into. Energy is obviously starting to perk up right now. And so you want to look for these types of investments. But you can see here, we had that buy signal and it didn't do anything. And again, that's bearish configuration. Don't expect those things to turn out. Well, that pretty much concludes it. I hope you enjoyed learning about these investment time horizons. If you want to watch more, go to my free DecisionPoint trading room on Mondays. You can sign up on my list on the DecisionPoint homepage. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.